Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, starting off with the Nifty, remember it's the NSE contracts weekly expiry today, 24,861. Remember, we've been trading in a very narrow band of range right from the very beginning of the session today at around 24,850 and thereabouts is where the markets have been holding on. You can actually see a lot of small choppiness that's existed through the course of the session and we've remained in that narrow band of trade as well. Now, when we look at the outperformance, it's clearly the IT sector that's outperformed this session today, with Infosys really leading up the move. 4.5 to 5% of a move on Infosys. It's crossed the 1500 mark as well. This is largely on the back of the announcement of buyback that the company has announced. Remember, this will be the first buyback from Infosys after 3 years. The previous one was seen in 2022. And of course, this will be, we will get to see more announcements on September 11 and with the upcoming earnings as well, we could actually expect the announcements of the buyback to come in. What form of buyback will it be? What will be the size? At what price will it come? Whether it will be from the open market. All of those decisions will also be coming in later. But it's clearly lifted the sentiments on Infosys today, almost 5% higher. It's at the day's high point. Along with this, all the other stocks of IT have also pulled up in this session today. Let's look at even pharma, that's also pulled up, and it's the defensive space that's definitely doing well. So FMCG, pharma, IT, all three of them have been hovering higher since morning. Let's also look at the broader market. Small caps are 2/10% higher in trade. You also have some banks like private sector banks and financial services that are hovering up. But on the declining side, you see autos in profit booking, consumer durables in profit booking today. You also see oil and gas, real estate and PSU banks also falling back in trade. This is despite the fact that India VIX is down by over 1% in trade as well. Top movers on the Nifty in the last half an hour of trade. Infosys tops the chart like I pointed out. Dr. Reddy's follows with over 3% gains now at 1289 odd levels. Wipro, Tech Mahindra, Adani Ports are the other top movers there. On the declining side, you have names like Trent. You also have Geo Financial Services, Eternal, the parent company of Zomato, NTPC and ONGC. These are the stocks that are declining in trade. Let me talk about the broadest index, the Nifty 500 names where some of the smartest moves are being seen today. ITDC, look at the India Tourism Development Corporation, 20% up in trade. Precision Camshafts, this stock has been consistently moving, 16% higher in trade. Quick Heal Technologies, another 16% of a rally that you are seeing on Quick Heal. Let's also look at Bluestone Jewelry. After getting listed, look at Bluestone, 13% of a rally coming in today. Bartronics, that's another one that's also holding up in trade. Let me also pull up Prime Focus, another one that's been on the move since this entire week and last couple of sessions as well. You have about a 9% up move on this one. Ashapura Mindchem is up. Gujarat Fluorochemicals, that's also another one that's been holding up. Salasar Technology, Techno Engineering, this was once the most subscribed IPO when it had come. And it's already rallied pretty sharply in the last couple of sessions alone, Salazar Technology. So those are all the stocks that are truly buzzing in the last half an hour of trade and throughout the course of the session. Let me welcome our guest on board. We have Mr. Devarsh Vakil now joining in to share with us his views on the markets. He's the Deputy Head of Retail Research at HDFC Securities. Devarsh, hi, warm welcome, good afternoon to you. Your sense of how are you looking at the markets right now? And, do you really feel these resistance levels that have so far posed themselves as key resistance for the markets, will there be a chance that we break above them and climb back to the erstwhile highs?
Right, thank you for having me on the show. So, we made a low around 21,700 in April, and then we had a sharp rally in next 2-3 months. Till June, we went to 25,600 kind of level. So, there was a sharp rally of about 18%. And since last 2-3 months, as you just mentioned, we are in a consolidation phase. We feel this is a healthy sideways consolidation, and we expect that there will be a significant acceleration in the earnings in the second half of the year, and that will help us move back above this range. So yes, we feel that there is some consolidation which is going on, but eventually in the last few months of this calendar year and in the first few months in the second half of the year, we will eventually break out of this 24,500 to 25,000 range. And as the earnings recover, as the earnings trajectory move higher, we will also move higher on the prices. As we know, stock prices are nothing but the slave to the earnings, and as earnings growth will kick in, the prices will move higher.
Okay, Devarsh, let's start off with the outperformers today. IT space and Infosys at large, that's been leading the rally from the front. How are you approaching this entire space? 5 days of losses, I think, are getting snapped today of the IT sector, led by Infosys, which is rallying on the back of buyback news. How are you approaching the sector and Infi?
Right. So we have been cautious on the IT sector. The IT is one of the, if you look at the sectoral indices, IT has been one of the worst performance. It is down about 20% year to date compared to about 5% growth in the Nifty. So it is one of the laggards, and we remain cautious on it. Albeit this buyback news is a bit of a positive for the sentimentally for the stock, and there could be some pullback, but we don't see this as a structural move. See, IT, they had the mixed performance of the quarterly numbers. The companies are actually undergoing a significant shift because there is a lot of AI related innovation, which is leading to a lot of vendor consolidation, and there has been a lot of delay in the orders which they get from the US market. So, right now, we remain cautious on the sector. Although at the end of the September month, we are expecting that because of the expectation of the rate cut in US and some kind of stimulus activity coming back into the US IT sector, the performance may improve, and so we need not be very negative from here. The deal momentum may pick up, and there will be some AI-led transformation deals coming in. So it is more of a neutral stance, and we will look to buy into IT stocks on further declines from now onwards.
Okay, got that. So that's the entire space of IT and Infosys as well. Let me also ask you on the other buzzing spaces of late over the last couple of weeks, the entire focus has remained on the GST rationalization theme and, of course, what that would do to consumption oriented sectors. Autos have been clearly reflecting as the biggest winners. We have seen how the index has performed, and most of these stocks have been betting big on the upcoming festive season. Consumer durables, FMCG are the other key sectors. Let's start off with these sectors and understand your approach there. If you have increased your positions anywhere, probably where have you turned bullish of late? If you could help our viewers understand. On the auto pack at large, where do you think the benefits will come in most, and how are you approaching this amidst the GST theme?
Right. So GST has been a significant reform. It is not a tinkering of taxes. It is actually a landmark development. So around 453 goods where the GST rates have been changed, around 413 goods where the rates have been decreased, and only around 40 where they have increased the rates. And if you look at this 413, almost 295 goods have now been put into either nil GST or 5% GST, which was earlier 12%. So we think this is a significant development which will boost the consumption. Government, let's talk about the impact of this on the government, and I've seen numbers. Government has mentioned that there are about 48,000 crore impact because of the impact on the fiscal because of this rationalization, but our calculation believe that it will not be so severe. The revenue gain from the consumption boost which we are likely to get, and various economists have different estimates, but it is something between 3 lakh to 3 lakh 50,000 crore kind of a consumption boost which will come into the economy, and that will itself lead to around 30,000 crore kind of revenue boost. So net impact will not be more than 3-4,000 on the fiscal impact, and that will be a really minor compared to the what it has been discussed. So as you mentioned, the impact is across the consumption. FMCG is a clear beneficiary, the daily use items. The automobiles are, in fact, the companies have already started passing on the lower prices, and we expect that this coming with the festival season, which we are going to see now, that will boost the consumption across the industry. So yes, auto and FMCG are going to be a key beneficiary. The rationalization of GST into staples and daily use categories, this is expected to lead to a volume-driven consumption growth, and that as the affordability will improve, either companies will cut prices or they will increase the grammage, and that will lead to volume growth. So, with festival season approaching, I think this will revive the volume and formalization of the sector, and that will help the organized sector earn better. So, so we have been cautious on the FMCG like IT, and now we are turning positive. Stocks like Marico, Nestle, Britannia, they do warrant a look from here.
Okay, fair point. Let me also ask you, there's a lot of buzz, not just in the secondary market, but also primary market as well. Devash, you would have seen that this week alone, tomorrow we are going to be seeing 3 IPOs open up. Urban Company is a more popular name that everybody is looking at, especially in the urban households. It's become a trend to be, looking at services that can be easily booked at the click of a button, for any of your household needs through Urban Company. We also have Shringar House of Mangal Sutra, and we have the office, space, Dev stock as well, which is coming up with the IPO. Any of these three that you may have covered from HDFC, and you may have come out with a note on, what is your advice to the clients there?
So, since we are involved with the IPO process, being a HDFC Bank subsidiary, we do not comment on IPOs. But what has been discussed in the red herring prospectus and what is public information, I think Urban Company is a category leader, technology-enabled services company, and they have been turning profitable. The growth is the business model is technology-driven, scalable model. So, for a longer-term investments. These platform-related companies, platform-based companies do warrant a look. I do not have a specific recommendation on whether to subscribe or not, as we are involved with the IP process. We're not allowed to talk on that.
Fair point. No worries. Just help us understand with, the rest of the calendar year and the rest of the fiscal year performance, and what do you see in the markets? Are there any newer themes that you're tracking at large?
Sure. So we have been bullish on metal and cement kind of sectors that continue to attract a lot of attention. I think these coupled with auto and FMCG sector, I think these are the areas where we need to look for opportunities. Um, Cement companies have delivered a fantastic performance in the Q1 FY26, partly because of the demand from infrastructure and housing sector. We expect that from here till next few years, 7 to 8% kind of a growth YOY will be available. And as we have seen the consolidation in the industry, as we know, the large players, the Adani Group and the Ultra Group has snapped up a lot of capacities, and that gives the pricing power to cement companies. So I think the cost pressures are down. Coal, fuel, and other costs have been mitigated, and now it seems that the prices are going to increase. The cut in GST also from 28% to 18% will actually help the overall cement industry in a higher growth trajectory. So we continue to like cement small cap and mid cap companies, and we keep recommending from them from that sector. Recently, we have covered Birla Corporation as one of the ideas, so investors can look to accumulate this stock for the longer term. Another sector where we are bullish and we continue to like for next couple of years is the telecom. India is the second largest telecom market, as we know, and the switch from 2G to eventually the monetization towards 4G and 5G is going to be a very long-term sustainable story. The average revenue per users are, which is around 200, 250 rupees, eventually will rise, and that's what these two large players in the industries are guiding for. So telecom, cement, FMCG, these are the areas where I think we can look at the ideas. Overall, structurally, we feel that it is a consolidation, small, short-term consolidation, longer term. Indian growth story is a structural growth, long-term
Sure.
story. We are fast-growing economy, and because of the domestic fundamentals, we are likely to head higher in next financial year.
Okay, fantastic. Devash, hold that thought there. Let me also welcome another guest of ours who's joining in. Sugandha Sachdeva joins in. She's the founder of SS Wall Street. Warm welcome to you, Sugandha. Good to have you with us. Well, our discussion will now focus from stock specific to understanding a broad investment theme that's clearly emerging by way of precious metals, gold and silver. And Sugandha is going to help us really understand how to really understand this massive move and unstoppable rally in gold and silver that we've been seeing. What lies ahead in case you are an investor who's still looking at what are the avenues in which you should be investing your money right now. Both Devarsh and Sugandha can help us understand how to look at these emerging themes as well. Sugandha, starting off with gold, again record high level is what we've seen today on the MCX crossing the 1,09,500 odd mark for the October futures and crossing the 1,10,000 mark for December futures. I'm told a lot of markets in the physical market in Delhi, they're already seeing prices for 24 carat of gold crossing that 1,10,000 mark for 10 grams of gold. We've already seen what a 35 to 40% kind of a rally year to date in gold prices, and it seems to be unstoppable. What do you think is the key reason why gold is shining so bright, Sugandha?
Yeah, hi Sakshi, thanks for having me here. So, as you rightly pointed out, gold prices are up by almost 40% this year. And if I compare with last year, September 9th, it's almost up by 52.55%. As prices were trading around 72,000 odd levels on this date last year, there has been a spiraling rally that we have seen in gold and silver prices as well. The major catalysts have been the de dollarization theme, the uncertainty stemming from the tariff policy of the US government, and the strong ETF inflows and the central bank purchases. And now the recent catalyst has been the rising expectations of a Fed rate cut in the September meeting and another two cuts through the end of this year. So these are the major factors that have been driving gold prices. Apart from that, we also have geopolitical tensions and the political uncertainty in Japan as well as in France. So from now, prices are already up significantly higher from last year's level. But yes, there could be some corrections on the way. But yes, the trend is still up. We have all eyes on the US CPI data, which is lined up this week, which will provide further cues about the monetary policy stance of the US Fed. But then a 25 basis point rate cut looks quite certain at the next week's Fed meeting. So, given these factors, my sense is that prices are overall in an uptrend, and we could see levels of around 3750 per ounce in the international market. While in the domestic markets, we are eyeing levels of around 1,12,000 to 1,13,500. But yes, a word of caution here,
Yeah.
there could be some corrections on the way, and there could be some deep corrections as well.
Absolutely. Okay. We'll come to that. Hold that thought there. I'll come to what are the opportunities of dips and corrections that we could probably look at as investors, because that is something that everybody would be looking at. But Devarsh, how are you looking at the clients' inquiries, gold versus equities? What are they looking at right now?
So we have been favoring gold as an insurance, as one of the investment avenues with around 5 to 10% kind of allocation, and it has more of a strategic allocation because see we have been seeing, as my colleague mentioned, the de-dollarization because of the
Yeah.
weakness in the dollar. The central bank around the world are actually adding to their gold reserves. India itself has, I think, added. Huge amount of gold from I think around 880 metric ton of gold reserves we have also as a country has added. The geopolitical uncertainty which we have seen, the turmoil in Ukraine, Russia and other parts also adding to the luster to the gold, and obviously the expectation of the lower interest rates. The as the interest rates are cut, I think the uh, safe haven requirement or the demand for gold is increasing. So we favor it, and we have been bullish on it for last couple of quarters, years. We recommend around 5 to 10% depending upon the individual's risk appetite and its asset allocation to keep a certain portion of their portfolio towards bullion. Uh, we see it as an opportunity, but as mentioned, it has run up a lot. So I also will caution here to
Sugandha
allocate
and
lump sum
Devarsh
trades.
actually believe that it has run up quite a bit and therefore the rally is dizzying, although at the same time it's important to have some allocation to gold and silver, at least at this point in time. But Sugandha, you were giving us that insight. A lot of our viewers would want to know what to do at this point in time. Should one go ahead and buy gold at this all-time high level or wait up? Remember, Diwali, Dhanteras, they are yet to come. A lot of people have been waiting for an opportune time to enter, but unfortunately with this kind of a rally, not many people have actually got that opportunity of a dip to enter into gold at any given time, and many of the weddings would also be waiting to happen now in December and in the winters as well. What should they be doing? There's also a query from Rashi Sharma coming in on that as well. So we'll just read that, and I'm sure a lot of questions will get answered. If gold and silver are hitting new highs, should I put my money in them or in shares? I think partly Devarsh has also helped you all address that one. But help us understand, Sugandha, what would you say on whether there will be an opportunity to enter?
Yes, many investors have missed this rally, but then those who have been waiting on the sidelines, there will be some good corrections on the way. I'm expecting levels of $34.20 to $34.00 per ounce. Yes, a deep correction is around the corner. In fact, we could be seeing this correction this week itself towards the weekend. After the CPI data, this could be a possibility. So in the domestic market, if I translate it, I'm looking at levels of around 1,03,000. That's a deep correction from the current levels. There could be some more upside in the immediate short term, but then wait for correction is the right strategy at the moment, even if it's your consumption perspective or be it a long-term investor who is looking for investing in gold from a longer-term perspective. The overall outlook is still very positive, and for the next year also, we are very positive on gold. But yes, if you enter in corrections, your risk reward will become much more favorable. See, gold doesn't give you any impulse. So if you enter at a lower level, it will certainly enhance your return. Overall, gold
Okay.
is a timeless asset. You can certainly invest even at current levels, but then waiting for corrections is my view
Sure.
currently.
So one must wait for corrections. There could be a dip till 1,03,000. Look at that level and then invest in gold. That's the clear advice. But overall, the bullish trend may sustain for the next year as well on gold, and that's what clearly Sugandha has mentioned. Till Diwali and till the year end, what's your suggestion, Sugandha, on gold? What are the levels you're looking at till Diwali?
See, I see gold prices heading higher towards 1,13,500, and that would translate to levels of $37.50 per ounce in the international market. I think prices would enter into a consolidation phase post that, and we might see a time-wise and a price-wise correction from those levels. Again, for the next year, we would be very positive, and by next year, we are looking at levels of around 1,25,000 as well for gold prices. So wait for some time. Corrections would certainly come in, and that will provide you a wonderful opportunity to add gold to your portfolio in different ways.
Okay, got that. Devarsh, to you also, I just wanted to ask you, if you have to compare with the upside that Nifty or Sensex will present, they've largely remained flat this year. From this time till the end of the year, what is your projected upside on the markets vis-a-vis what Sugandha is expecting on gold?
So as you mentioned, the year to date, gold has already run up around 40,
Yes.
45%, and Nifty has been struggling on the back of lackluster growth. So the Nifty aggregate earnings growth have been stable around 5%, and that's what we have seen in the Nifty performance. Now we are expecting in the second half of the fiscal year, Nifty earnings to actually significantly pick up, and that means that from this level, if I were to choose one of these two, then I would bet more money towards Nifty, and that would be a longer term allocation.
Got
And
it.
as you mentioned, gold or bullion should be around 5 to 10% as a portfolio hedge from
Got
here
it.
on, as it is because of the dollar
Sure.
weakness.
Sugandha, tell me now, there is another key question that a lot of our viewers are looking at, because gold versus silver, what exactly should one be really looking at, and where are you more bullish on right now? We're seeing both gold and silver also scale up pretty much almost the same fashion. Last 1 year returns of gold is 55%, silver is 53%. Help us understand from here on what happens then, and what do you think will outperform between gold and silver?
See, my pick is certainly silver. In fact, since last year itself, we have been maintaining that silver will outperform gold. I think the tariff headlines will subside in another 3 to 4 months, and we are seeing a pickup in demand from China. China is coming out with a lot of stimulus measures, and the industrial demand for silver is picking up significantly. So, and the gold silver ratio is also pointing towards outperformance from silver, be it the usage of silver in solar panels or 5G technologies. That's likely to keep the silver prices in demand. So I see silver prices heading higher towards 1,35,000 by Diwali this year. And by next year, I'm expecting levels of around 1.5 lakh for silver. So silver is likely to outperform. And in case somebody is looking at allocating funds towards bullion counters, I think silver can assume a larger portion of that. So overall, we advocate a 10 to 15% allocation towards a bullion counter. Even if you have a slightly lower risk appetite, then you can go in for gold. But then if you are looking for higher returns, silver should assume more part in your portfolio.
Okay, so can you give us the outlook on silver prices as well? You said 1,13,000 and upwards of
35,000.
that for gold for till Diwali. So what is silver now? What is the outlook on silver?
Sakshi, my outlook for silver is 1,35,000 till Diwali, and by next year, 1.5 lakh for silver.
Okay, so there's still a lot of upside that you actually expect silver to outperform gold, viewers, at this point in time. That's what Sugandha's belief is. Gold can touch 1,13,000 by Diwali, but silver can hit 1,35,000. It's already at 1,26,000. So another 10,000 kind of a bump up is what you can expect. And by the next year, 1.5 lakhs per kilogram on silver is what you could clearly expect there as well. I'll take one more question with you, Devarsh. We have Satpal Vatsa from Hyderabad writing in this question, a very interesting one at that, a young viewer of yours who says, with iPhone 17 launching and gold hitting record highs, should I buy the latest iPhone or should I invest in gold or equity? What should I do? How would you address this one, Devarsh?
So we have done a study, and if he's a young investor, young saver, I would say he should put money into Nifty ETF for next 25 years. And after 25 years, the kind of return he will get, he'll be able to buy one iPhone every month from the savings which he has done. So rather than just let go of consumption once, save for longer term, and I think he will have plenty of money to splurge after 25 years.
Okay, got that. So invest, for about long term, and then you could actually create a corpus so that you can buy a new iPhone. But an iPhone only comes once a year. So, you'll have to think of newer ways of spending. So, Gandha, what would your thought be when one has to really decide as to how to go about it from here? You've been covering equities also for a long time now. So, help us understand what's your sense, gold, silver or equities. Your erstwhile love has been commodities, precious metals, and your recent love is equity. So how would you advise your clients and viewers of
So
Business
even
Today?
I concur with the verse. Even I would suggest to invest in equities at current point in time because the valuations are looking slightly attractive. A lot of positives we are seeing: the GST structural reforms, the dollar index trading at a 7-week low, and the Fed rate cuts round the corner. So all of these factors make me believe that yes, we are likely to see a significant uptick in equities from here on. So my take would be there would be a lot of rebalancing, and investors might look at equities at current point in time, and we are
Sure.
likely to see significant returns coming in from here.
Okay, consensus between Devarsh and Sugandha then to invest in equities at this point in time. Sugandha, last question. A lot of people would be wondering, if I have to go for gold and silver at these levels, should I go for physical or should I go for digital form of gold? What are you advising them?
See, my sense would be to go for gold and silver ETFs. They have delivered significant returns, and you do not have concerns about purity, theft. That's a digital option, an easy option. They are fairly liquid. The way you invest in stocks, similarly, you can invest in gold ETFs and silver ETFs. They are easily available on the bourses. The only requirement is to have a demat account, and you can easily hold on to them for a longer term perspective. Even if you want to liquidate your holdings, it's very easy. So here, I think the clear outlier would be gold and silver ETFs as compared to physical gold.
Okay, fantastic. Well, we have as much time on the show, but thank you so much, Sugandha and Devarsh, for being with us and helping us with your insights on both equities as well as the bullion at this point in time. Let's keep our focus continued on both equity investments for the long term and ensure a decent asset allocation like you both have advised on both gold and silver. Via ETFs is what Sugandha says is a better way to invest in these two, at least at this point in time. Always a pleasure to speak to both of you. Thank you so much for your time.
Thank
Thank
you
you
for
so
All
much.
having
right, viewers, we'll start wrapping up. The markets, 3:31. You can actually see the markets have shut shop with the green tick, 24,868 on the Nifty and 95 point of an uptick there, 4/10% higher. So we came up slightly higher than the range that we were hovering in, but just about marginal. Nifty Bank flat with a positive bias, so the Nifty has outperformed there. Broader markets have in fact performed almost in tandem with the Nifty today. Small caps up 3/10%, mid caps have underperformed a tad bit, but IT index 2.7% higher. The top moving sector led by Infosys, that's up 5% at 1504. Our pharma stocks also higher by almost a percent. FMCG higher by a half odd percent. You can also look at private banks, financial services that also showed some ticks on the higher end. India VIX on the expiry session has seen a dip of 1.8%. Real estate, oil and gas, consumer durables, autos and PSU banks slightly declining in trade. Infi, Dr. Reddy's, Wipro, Tech Mahindra, Adani Ports, top movers on the Nifty on the expiry session. When we look at Trent, Eternal, Geo Financial Services, NTPC, these are the other ones that have dragged in trade. But PSU stocks, the index is lower. You did have a lot of power related stocks and railways that were in clear focus in today's trading session, and a lot of buzzers in the Nifty 500 basket, from ITDC to Precision Camshaft to Quick Heal to Bluestone jewelry. You also had Salazar Technologies, British Nandi Communications, prime focus from the movie world and exhibition space. Look at Gujarat Fluorochemicals, all of these stocks that really pulled up in trade. With that, we wrap up. Do stay tuned on to Business Today Television. Even beyond the market hours, we continue to get you all the fascinating insights from the world of business and finance, so stay tuned for that.